I am a believer that there is not going to be a recession anytime soon. I've yet to see any kind of proof of that. And I think that rates are going to do exactly what the Fed's been telling us to do, which is that they're going to be higher for longer, you know? Um, so what do I think about the stock market? I don't think the stock market has seen its high yet. I still think it has some work to do to the upside. Um, we came into the year with people extremely bearish. Um, and while I would say any kind of momentum trader or CTA or trend follower has had to get out of those shorts and start to get long, certainly, I don't think that this stops until the fundamental people give up on this whole bearish idea. And it's like you say, they're bearish because there's going to be a recession, but they're also bearish because the interest rates are going up. You know what I mean? They're bearish because of this, they're bearish because of that, they're bearish, bearish, bearish. And I think until they give that up, the market's going to keep going up.
On this episode of the What the Finance podcast, I have the pleasure of welcoming on Jason Shapiro. He's principal at JS Trading and chief strategist of Crowded Market Report. So, Jason, thanks so much for coming on the podcast today.
Yeah, thanks for having me.
No problem. And I'm really looking forward to speaking with you because I think you have a really interesting, strategy in how you trade, and it's a little bit different to whatever everyone else does. But just from your perspective, what are you currently seeing in the markets? It seems like everyone's thinking that data is going to be bad. We're going to get a recession. That's going to then permeate to the markets. The Fed's going to tighten, but we haven't really seen that. It seems like markets just continue to go up. So, what are you watching, and what do you think will potentially happen in the near term?
First of all, I don't understand that because I agree with what you're saying. Everybody thinks that there's going to be a recession and that's going to follow through in the markets, but they think the Fed is going to keep raising rates. So they think there's going to be a recession, but they think the Fed is going to keep raising rates. I don't, I don't get that at all, personally. Shouldn't it be one or the other? That's A. B, I would say I'm a personal believer that none of that matters anyway. Especially when everybody sees it. I don't really see what the advantage of knowing it is. So that would be my second comment. And my third comment is, I guess if I had to guess, I am a believer that there is not going to be a recession anytime soon. I've yet to see any kind of proof of that. And I think that rates are going to do exactly what the Fed's been telling us to do, which is that they're going to be higher for longer, you know? Um, so what do I think about the stock market? I don't think the stock market has seen its high yet. I still think it has some work to do to the upside. Um, we came into the year with people extremely bearish. Um, and while I would say any kind of momentum trader or CTA or trend follower has had to get out of those shorts and start to get long, certainly, I don't think that this stops until the fundamental people give up on this whole bearish idea. And it's like you say, they're bearish because there's going to be a recession, but they're also bearish because the interest rates are going up. You know what I mean? They're bearish because of this, they're bearish because of that, they're bearish, bearish, bearish. And I think until they give that up, the market's going to keep going up. Now, that doesn't obviously mean it's going to go up every single day or every single week or whatever, but I do not think that the highs are in until those people throw in the towel. And I don't know what's going to get them to throw in the towel. They've changed now from what I can read to this whole bearish scenario to, oh, well, I'll buy, but I'll buy the first, 10% pullback type of thing. So what my gut is telling me is we ain't going to see a 10% pullback anytime soon.
And how will you know when maybe they've changed their perspective and they've given up on that strategy?
We'll hear it. These people are on TV every day and they're all spouting, their expertise every day. So at some point, maybe they will give up on this idea. How will that look? I just don't know. Maybe they'll give up on the recession idea. The numbers will keep coming in stronger and they'll give up on the recession idea. I still don't know how they're going to justify the valuation idea at that point. But maybe the economy grows and earnings are much better than expected, and that helps them to get rid of the valuation idea that they have at this point. I don't know. It's going to be interesting to see how they get out of this, because they've been bearish and short for so long, and they've taken so much pain on this. it's going to be very interesting to see psychologically how they're going to get out of it. What I'm starting to see is them saying things like, oh, well, buy the things that are value, meaning the things that haven't gone up, buy the laggards, right? It's such a classic bad trading technique, right? So they're starting to say buy the laggards. So it's the beginnings of them sort of giving up on this idea. But when the full capitulation will be, it's going to be very, very interesting to see.
Yeah, definitely. So when you say buy lag, is that maybe rotating into different industries that maybe haven't benefited so far, or is that more just looking at the industries that have benefited and finding those companies that maybe
I
haven't
think it's
pushed up?
both. I think it's both. I hear both of those. I hear people say, "Oh, we'll buy the oils and buy the banks," which seems like they always say because those are always some laggards. But I also am hearing people saying, "Oh yeah, well, don't buy, Nvidia, buy this one that hasn't gone up yet," which to me is just it's just such bad trading. It's so ridiculous. Like what? Nobody knows that. Nobody follows these other companies that haven't gone up yet. Like there's a reason why to me, why those companies haven't gone up yet, right? It's not like nobody is following these companies. There's hundreds of analysts that know them, right? There's no secret sauce to that, right? There's a reason why things lead, and there's a reason why things lag. And if you think you're going to play that buy the laggard, sell the leader game, I think over time that's not going to be a very good strategy.
Yeah, it's something that, as you said, those industries have most of the time underperformed the market over especially in the last decade or so. So you mentioned that there's these reasons that these companies go up. There's these reasons that you're sort of watching. You might not be watching those specifically, but you're being on trade. So maybe can you talk a little bit more about your strategy and I guess maybe how you came to the strategy and then why you think it has been successful?
So the basics or the real kind of core of my strategy is the belief that over time the majority of people lose money trading the markets. And even if you're long only, then we could say the majority of people underperform the indices, which we know is a fact, right? And it's not just 60 or 70%. You're talking about in the 90% of people will lose money trading the markets. So it's as simple to me as figuring out what those 95% of people are doing and just taking the opposite side of their trades. If they're going to lose money, then I would like to take that money, so to speak. It's really as simple as that. Um, I'm not trying to outthink it. I'm not trying to outthink the marketplace. I'm not trying to be smarter than everybody else. I am just trying to find what people who are going to lose money over time are doing, and essentially make them a market. Be on the opposite side of them and gain that money that they're losing. That's really the basic premise of the whole thing. And I came to that after many years of doing what most people do, fundamental analysis, technical analysis, buying breakouts, Fibonacci number, whatever it is, head and shoulders, and getting nowhere doing that, going through sort of the classic what everybody goes through, which is make money, lose money, make money, lose money, make money, lose money, and 10 years later you've gotten nowhere. And I came to the conclusion of I don't want to do that anymore. I'm not really trying to do this for fun and enjoyment. I'm trying to do this to make money over time. Um, so that is what I found to be the best way and easiest way. Not that it's ever easy, but to make money over time, and the mathematically most valid way to make money over time. That's kind of how I came to it. I had always, like a lot of people do, I've read a lot of books about trading and trading psychology and all this type of stuff. And one of the things that stuck with me was the idea of keeping a journal. So I journaled my trade time, and I was able to go back at one point and say, well, what's actually working here? What trades are actually working? Not what's working once, but what's working over time. Here, breakout trades. Well, here's all my breakout trades. Did they actually work over time? I remember that one that worked great, but do they actually work over time? And I was able to do that and start eliminating all the things that weren't working over time and sticking to the things and focusing on the things that were working over time. And what that ended up being was fading the mass consensus. So that's what I do.
And is that what the, so I guess when you say do the opposite to other people, is that what most people do, consensus? Can you maybe explain that further? You've given us a few examples, but what do most traders do? Um, yeah,
What do most traders do? I
yeah,
think that most traders follow the fundamentals, and it's funny because it's like two levels of wrongness, right? One is they're trying to predict the fundamental better than everybody else. I don't know how you're going to do that, right? Um, you will sometimes, but you know what? I can flip a coin, I can call heads, and I can get it right sometimes. Doesn't mean I got it right. It just means I had a 50-50 chance of getting it, right? And I think that that's what people do. Oh, I think that the payroll report is going to be this much different than what people are thinking. So I'm going to put a trade based on that. Okay, well, you might get that right just because you flipped the coin right, right? It's either going to be higher or lower, right? Um, but then there's the next level, right? Which is, okay, you got that right. But now how is the market going to react to that? It isn't necessarily going to react how you think. Payroll number is going to come out higher. Therefore, the Fed's going to raise rates more. Therefore, that's going to be bearish the stock market. Maybe, you know, and maybe not, right? We have seen, if that's been your thought process this whole year, we have seen a lot of stronger than expected economic numbers this year. And bonds are at their lows of the year. You know, rates are at their highs of the year right here. And the stock market is essentially at the high of the year. So if you were trading that idea, you may have had it right that the numbers were going to come out stronger, right? Although you didn't because you were thinking a recession was coming. But let's just say you did. The numbers were going to come out stronger. So therefore, the Fed's going to raise rates, and therefore you're going to short the stock market. Well, you're getting destroyed, right? So even if you got that first part right, you got the market wrong. So that's what I think most traders try to do. And I sort of understand that there's a psychological need in human beings where they want to be right. You know, they want to make predictions that are right. Um, it feels great to be right, you know, but that doesn't work in the market. A, because your chance of forecasting better than the entire planet over time is close to zero. And B, because the market isn't necessarily going to do what you think it's going to do, even if you get the forecast right. In fact, most of the time, the market will do what you won't think it's going to do. And that's because everybody else thinks the same thing, and therefore it gets crowded, and the market goes away and screws the most people. So I think that's what most people do, and I think that's why they get in trouble. And then they have this selective memory of, oh, I got that so right. Look at me, just like me. Hey, I flipped heads. Look at me. I'm the greatest heads flipper in the world. So I'm going to start betting that I can call heads or tails, right? Which of course I can't do. And there's no difference to me between those two things, right? Predicting economic numbers better than everybody else, or calling heads and tails better than anybody else, are the same exact thing to me. It's not going to work over time.
yep. And then as you're saying there, even if you do predict it correctly, you might get the outcome might be correct, but then the moves in certain, the positions you've taken might be different to what you expected to happen.
I've heard a number of people this year come up with what has become my favorite line, which is like, everything I've said has been right except the market. Okay, wonderful. But that's the only thing that we trade. So that's the only thing that matters, right? So to say that you got all the economy things right, but you got the market totally wrong. Okay, well, what does that tell you? It tells you that the economy thing doesn't help you to make money over time trading. This has been the perfect year for that. And I've said this many times over the past 20 years, but this year, just like every other year, if I had given you all the numbers that were going to come out this year on December 31st, and I told you everything that was going to happen with the geopolitical situation, with the banking crisis, with all this stuff, what would you have told me the stock market was going to do? And I can tell you, there's a very small chance that you would have said the stock market was going to go up, that the NASDAQ was going to be up 40%, right? And that the S&P was going to be up 15, 16%. I can't see anybody that would have said that had I given them all the numbers on December 31st. So that's what I think people do, and that's where I think they get it wrong. They think it's about, everybody's focusing on, they think it's about this, which would be hard enough to predict if it were about that. But the whole problem is it's not even about that. So you're focusing on completely the wrong thing.
Yeah, definitely. It's crazy to think. And I guess if we look at what's happened, really what's been driving the market, other factors, but it's been a concentration of these few equities that have really outperformed, I guess, and has carried it up. So when you're looking at, I guess, taking the contrarian view and then trying to trade against what everyone else is doing, is that where you're looking at the opportunities with these companies that have overperformed this year, and then you're sort of looking at, okay, maybe that will change in the future, or sort of how do you take that into account?
So first of all, I'm not going to say that's not true. We all know that there's these seven stocks that have gone ballistic, but I don't know because I don't do that kind of work. But I've seen plenty of people that do the work on how many stocks are performing and all that, and it looks to me like the breath is not as bad as advertised, right? Like, sure, not every stock is up 150% on the year, but there's a lot of stocks that are on year highs, that are on new all-time highs. The breath is not, I don't think, as bad as advertised, right? I think that that's a great mantra that the bears keep using. Oh, there's only seven stocks up. Okay, great, but you're still losing money. Like, these are all just excuses, right? So, but I don't trade individual stocks anyway, so I don't spend a lot of time looking at that other than to laugh at all the people that keep shorting these stocks. But for my trading, I don't really look at that. I try to look at positioning data, like the commitments of traders data, because I'm a futures trader. So that's the positioning data in the futures market. I spend a lot of time looking at that. And I spend a lot of time listening to people that are on the television and are getting interviewed. And I spend a lot of time listening to them trying to build what the consensus is, right? If I have any kind of skill, I think over time, it's that I can do a pretty good job of finding consensus, which quite frankly is not that hard because you turn on the TV and you'll get 25 people come on there and 24 of them will say the same exact thing, right? So it's pretty simple to build the consensus. Right now, it's funny because right now the consensus is a little hard to determine because there's clearly more bulls than there were. And I have no positions on because the consensus is not really there. But earlier in this year, at the beginning of this year, it was one of the most consensus things I've ever seen in my life. Everybody knew that a recession was coming, so therefore the stock market was going to go down the first half of the year. And then the recession, people were going to start discounting the fact that the recession was going to end and the stock market was going to go up the second half of the year. So blindly at the beginning of this year, I said the stock market's going to go up the first half of the year and down the second half of the year. I didn't do any analysis on this. I didn't do any cash flow analysis. I didn't know that NVIDIA was going to go up, 200% or whatever it is. I didn't know anything about AI or chat GGP or whatever. I didn't know any of that. It was based on the fact that everybody I heard was saying the same thing. And from what I have found over 30 plus years is that when everybody is saying the same thing, it never works. So not once. So therefore taking the opposite side of that is the way. And then the positioning in the commitments of traders was confirming that. That's really my main driver is the positioning. But when the positioning and the consensus confirm, that's kind of where I get involved.
Yeah, that makes sense. So, you sort of outlined, I guess, the strategy and how that works out. Can you maybe give us I know this probably is a bit of a simplistic way of doing it because it's a continuous process, which is you're always looking at the consensus and what's happening. But then for you to put a trade on, what would you have to see? What would be sort of your like step-by-step process to then say, okay, this
So it
is.
starts with the commitments of traders data,
Mm.
which I index. And I need the index to be either below 5 if I'm going to buy, below 5 meaning everybody's short, or above 95 if I'm going to get short something, which means everybody's long. Starts with that. The data is certainly not perfect. So I don't just do it on that. I then need, and I would suggest that anybody do this for any kind of trading process that they're doing. Before I actually take a position, I need a market confirmation, right? If the market's going straight down, straight down, straight down, and everybody's getting short, 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 that's not enough for me to buy. I need the market to actually confirm first. And everybody has to define what confirm is that should fit into what their process is, right? If you're doing a breakout process, then a confirmation would be a breakout and a close above the breakout level, I would guess, right? For me, because I'm doing a market turn thing, I'm picking market turns. And I'm being a contrarian market turn picker. What it looks like is, so everybody's short, I'm looking to get long. I'm waiting. and I'm waiting for the market to confirm. And what that means for me is it kind of rejects news that should have pushed it down more, right? So that's why I'm paying attention to what people are thinking and what's making them bearish. And I always go back to one great example, which is the lows in the stock market last year was on the highest CPI day of the year. And CPI was pushing the market so much at that point, right? Inflation was the big fear, and that's why the market was going down. And we got a bigger than expected CPI that day, and the market traded down and it closed up on the day. And to me, that's like the market confirmation right there. The market didn't go down on what was the worst possible news that it could have gotten. So it's now, and everybody's super short. So that confirms for me, okay, it's time to get long. And that gives me a few things. One, gives me a market confirmation, obviously, but it also gives me a great way to do my risk now, because if I'm picking the turn, that's either the turn or it's not. If it's not, then the market makes a new low. So I get out. I'm picking a turn, market makes a new low. I didn't pick the turn. I'm wrong. I'm out, which again is what everybody should think about with their process, I believe, right? What is the definition of what you're doing, and what is the definition of when it's wrong? And when it's wrong, take your loss, right? And then I do my risk to that. So I know where my entry is, I know where my stop is, so I know how to size my trade so that I will lose this amount of money should I be wrong.
I'm sorry.
Yeah, it makes sense. So then, in if you were to get say stopped out, or if you were to then close your position, would you continue to watch and maybe look for that next opportunity to get in when that when you get further confirmation? Would you just step away
Yes.
and
No, it's the same thing. As long as the positioning is still giving me the same reading, and it's the same thing. I will put it on again on another news failure kind of confirmation type of thing. And sometimes it takes, 3, 4 times before it works. Sometimes it works the first time. Sometimes it never works. But it's not like you're going to consistently, like if it's a good market that keeps going down, you're not going to consistently get these news failure events, make a new low. It's going to rally on bad news, and then it's going to make a new low. And then it's going to rally on bad news and make a new low. Something happens in between those two things happening. Sometimes they will get out of their shorts, and therefore it will no longer be set up for me to buy. Um, the most times I've ever really seen it is 3 times in a row before I didn't give up, but either the data changed or it worked.
yeah, it makes sense. And I guess in terms of your own positioning of the trade, is that based on the data you're seeing, or is it just consistent? So
What do you mean by the data I'm seeing?
so say if maybe if you have more, and this maybe is going back to the fundamental analysis, if you have I guess more data that's proving so more examples of negative data, but then maybe there's been it sort of bottoms. Would you put a larger proportion or a larger position on, or is it your position just
No, my
consistent?
position sizing is all determined by how much money I'm going to lose to the stop. I'm risking a fixed amount of my portfolio per trade.
Okay, that makes sense. So if we look at, I guess maybe things that you're watching at the moment and sort of sectors or industries or different assets that are in maybe that position, or you said above 95, below 5, where
Mm-hmm.
you're watching for that data to, or for that asset not to have a reaction. Sort of what are they at the moment? Is there anything, or is it just there's nothing there at the moment?
No, there is. So there's not a lot. I got to say, right now it's been very quiet. But like for example, I got long yen recently. I have 2 positions on right now, essentially, which is short the British pound, which is not working very well, and long the yen, which I just put on. So really, my value at risk is so low right now because I'm short pound, long yen. Um, but like short pound, again, they were super long. Bank of England was raising rates. The Bank of England came out, raised rates more than expected a few weeks ago, or more hawkish than expected. The pound went up, made new highs, closed down on the day. I get short right there. It worked at first. It's now going in my face a little bit. And the yen was a similar thing, which was last week, where the Bank of Japan was less hawkish than expected, and the yen should have gone down, and it closed up on the day, and I get long against that low, which makes my portfolio pretty neutral. I mean, I'm literally having like 2, 3 basis point days right now. And those are really the main. I mean, other than there's like a coffee trade, which most people probably aren't interested in, but we're seeing coffee very short here. Um, Coffee in some of these markets gets a little bit difficult, um, because how do you read that news failure on coffee? You know what I mean? It can be a little bit difficult. Coffee, cocoa, markets like this, how do you really read that news failure? It has, for me, to make a trade on something like that, has to be super obvious. It's got to be some kind of global coffee report that came out and was super bearish and the market closed up or something like that. You know, it's a lot easier to get a read on the financials, the stocks, the bonds, even gold, even oil, because people are consistently talking about that stuff. Even grains, you know, have pretty consistent reports that people are watching that are sort of can be bullish or bearish. Softs are a little bit more difficult in those terms, but not impossible. And the softs tend to be good counter trend trades when I get them. I trade them smaller for the reasons that I'm talking about. First of all, there's less liquidity in these markets. And second of all, the news failure kind of confirmation is a little bit tougher of a read. So I'm not going to, you know, lose the type of money I would lose on a trade like that I would on something I can get a much better read on, like stocks that people are talking about every day. But that's really kind of all I have set up. Now you can start to then, for I almost don't want to say this because I hate for people to be bearish the stock market, but you can get a further read. If I'm looking to buy yen and sell pound, and if you say pound is similar to euro, I'm essentially selling euro yen, right? Which is a bearish trade, right? Traditionally, right? Euro yen's a risk on asset. So if I'm selling that, then I'm somewhat bearish. It's somewhat of a bearish trade, but not always. You know, sometimes these correlations break. Sometimes this can be the first one to go. You know, euro yen can be the first one to go because that's where the most crowdedness is. Stocks can keep going even as euro yen is falling. Talking my book here, of course. And then maybe the stocks can go, right? But or maybe the trade just doesn't work and I lose money. You know, I mean, it could be any of those things. To me, it's all just about the risk reward of the trade, right? I don't believe it's just like the coin flip thing, right? I'll flip coins with you all day if you'll pay me $3 every time it comes up heads, and I pay you $1 every time it comes up tails. And to me, that's the game, and that's the game of trading as well. It's not about predicting the future. It's about getting into things that pay you three and lose you one, pay you three, lose you one. And then 50-50 is going to be a home run. I do less than 50-50. My trades are somewhere a little bit less than 40% winners, but my payouts are 3 to 4 to 1. So over time, that's what works for me. And none of it is about my ability to predict the future or predict the macro or predict anything, because I can't do that. And I don't care what anybody says, nobody can over time, right? Nostradamus isn't a real story, right? You cannot predict the future. I don't care who you are. And the markets are random most of the time. So you're predicting the future of randomness. It cracks me up, really, the amount of money and time that is spent on this whole game of Wall Street, of people convincing people that they can predict the future or they can predict this random. It's the silliest thing in the world, but it's what gets the game going, and it's what gets people paid, I guess, you know. So that's what they do.
Yeah, it makes sense. Great, amazing insight. So, Jason, thanks so much for your time. I really appreciate it. As well as one message you'd like people to take away from a conversation.
I think what I was just saying there, you know, don't think that you're going to predict the future, because you're not. And don't be fooled into thinking that you did predict the future just because you called heads and it turned out heads, right? That it's going to be a losing game over time, you know. And if what you're doing is for fun and for hobby, and you think the market's kind of exciting and all that, then by all means, you know, do what you do and have fun, right? But if your goal is to really earn a return over time, if that's really your goal, right, then you have to focus on risk reward, right? Which is really going back to focusing on, you have to focus on process. You have to have a process that offers risk reward over time, right? Um, that's the main message that I give to everybody, that I try to give to everybody. I don't know that anybody listens. I don't know that anybody believes me. My clients believe me, fortunately. But I don't know if they believe me, but my returns have been pretty good, so they stick with me, right? And they know that this is what I do. But you know, it all sounds crazy, you know, it all sounds different, but from the bottom of my heart, I promise you, this is how the markets actually work. So if you can somehow, it's very difficult because that's not what we're taught. We want things to make sense, right? We want the market to make sense. Just so we want everything to make sense, right? We want the market to be about these economic fundamentals because that somehow seems to make sense, right? But it doesn't. That's not how it works. And the reason it's not how it works is because the market is a discounting mechanism. So it doesn't work like that, right? It's just like saying the best football team is going to beat the worst football team fundamentally. Okay, yes, but there's a point spread involved, right? That makes it, efficient, right? Um, and it's the same thing with the market, right? You're not going to, like I say, I could have given you all these numbers on December 31st and you would have lost money. Okay. You would not have gotten the market right. So think about it. And this is not the first time that's happened. I have made videos and said this many times over the years, over 30 years. Well, I would say the first 10 years, I didn't know what I was talking about, but the last 20 years, I've said that many times. I could have given you all the numbers 6 months ago and your predictions would have been all wrong. It's just, you have to come to the conclusion if you want to that's really how the market doesn't work. So that's you're chasing your tail doing that.
Yeah, I think a lot of people they just have to learn it the hard way. Unfortunately,
I think we all do.
Yeah,
I think everybody does. Nobody, I did too, right? And you have to come to the conclusion, which is hard to do. Of hey, what I'm doing is wrong. So what the hell is right? You know, um, I have like a web page, and I tell people that go out and do your stuff, right? Go out and pay these guys that tell you that they're going to turn $10,000 into $10 million in a year for you, and they're going to give you all like my whole webpage. It's not about being a tip sheet. I'm not trying to tell people what to trade. I do show them what I'm trading based on my process, but I encourage them to not trade my process because they're not me. They should trade their process and hopefully use some of the lessons I've learned to enhance their process. Is my story, but I think go out and pay these guys and take their tips and do all this and all their hype that they give you, and they're driving in their Ferraris and showing you their mansions and oh, they must be rich. So if I follow them, I'm going to make money. Go do that first. And when you find that you've done nothing but lose money, then come to me and come to us, and hopefully we can help you get to a better place where you can actually, learn how this really works and learn how trading really works. Because like you say, they're not going to listen to you until there's pain, and then they will learn, just like I did, right? So, I don't think any of us are really any different. We all want to be unique, right? But the truth is, we all fit in that normal distribution curve. So the longer it takes, well, the quicker you can get to understand that, I think the quicker you can get to actually putting up positive returns over time.
yeah, great message. So thanks again for your time. If anyone wanted to find out more about your work, what you do, where would the best places be?
Yeah, so we have this crowdedmarketreport.com, which was started after I was in Jack Schwager's latest book, and I started getting a lot of requests from people. Hey, can you teach me how to trade? Hey, can you mentor me? Hey, can I come and make you coffee every day and all that? And I wanted to do that. I was helped and mentored myself, and I think it's an important thing to pass along over time. And as I get older, um, I realized that that's also a very big part of life. I like to say, like, I sit here all day and I try to pick off the weakest people out there and make profit off of that. Now, I don't make excuses. Okay, that's great. That's what puts food on my family's table. But as far as contribution I've made to this world, what I mean? It's not that great. So I feel like as you get older, you come to this conclusion. If you can help people, then that maybe helps you. It really does help you, right? So we started that. One of the people who had asked me for that, I said to him, I can't do this for 200 people at the same time. I have a family, I have a job, and I don't know who to pick. He said, well, why don't I start a web page and you could centralize it and do that. So we did that. We do a newsletter. We have a Discord page. We talk lifetime about the trades. I show my trades. I talk about a lot of risk management stuff. I talk about a lot of these lessons. So there's that. I also do videos every week. On the weekends, we do a video every weekend on YouTube, which is all free, Crowded Market Report. And then I'm on Twitter too. So although there's a few fakes, so be careful, but there is a Crowded Market Report that's real on there on Twitter.
Yeah, perfect. I'll put that in the description below. But thanks again for your time.
Yeah. Thank you.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.